Hi everyone. So I'm Emily and I'm a financial technology consultant at Hyperbot Systems. I'm pleased to have Ayo on the call with me, who is a CFO at Kobo 360. So today we'd be talking about the challenges for adoption of AI in finance and accounting. Ayo, would you mind telling us a little more about yourself?
My name is Ayo Fashina, as you just introduced me, uh, the CFO of Kobo 360. It's an e-logistics startup that operates in 7 African countries. And I joined Kobo about 2.5 years ago. And prior to that, I was in the development finance world. I used to be at the International Finance Corporation. And before that, I was an investment banker. And prior to that, I was an engineer. So I have different backgrounds, but now I'm a CFO.
Great. Thank you so much for the introduction, Ayo. So, as you mentioned, you've been a CFO for a long time and you've been in finance world for even longer, more than a decade or so.
Yes.
And, you've also completed like a data science program at MIT. So, what was the need that you felt to attend such a program?
You know, when I was in business school, they invited a former CEO of Citigroup. And he was asked, what was the course that you wish you had paid more attention to when you were in business? And he told us statistics. Now, statistics is a course that most business school students are not interested in. They always complain, why do I have to take statistics? I should be taking corporate finance. But what he told us was that as a CEO, you're always given, you have data coming at you continuously. And you're supposed to use that data to make informed decision. And how you analyze that data is very important. And that was back then. I'm talking about maybe 15, 20 years ago. Now we have big data. Data that was collected back then it pales in comparison to the data that we collect nowadays. So I thought to myself, what do I have in my tool set and what do I lack in my tool set as a CFO, as a finance professional? And I've taken statistics in the past, but I think I don't have enough analytical ability to be able to analyze big data that we're getting nowadays. So I decided to take the course of data science at MIT just to introduce myself. I know I won't be the one running the data analysis, but at least if I have an understanding of what's being done by the analysts, then I can ask the right questions to get them to give me the right results.
Got it. Got it. That's really interesting. So, Ayo, what there is a buzz around AI and it is changing the way business is conducted. So, do you see this to be just a buzz or do you see it happening in reality?
AI is not a buzz. It's already with, and it will continue to grow in our daily lives. And I'm not even talking just in business. I'm talking generally. AI is the way of doing business going forward. Most people are already using AI, but they don't know that they're using AI. For example, on Netflix, all their recommendation that pops up for you, it's AI that's generating it. It's using data from your behavior to analyze and recommend shows that you might like or movies that you might like. That's AI. Most people would know it's AI, but because I went to my data science training at MIT, I understand that was AI. Initially, I didn't know that. And then for data continues to be, like I said, we continue to collect data. And if you collect data just for collecting data is a waste of time and a waste of space. However, AI is a way to analyze those big data very quickly and make some informed decision out of it. So I believe that the awareness will grow exponentially among people generally, business world, finance world, and even just normal individual. Look at what OpenAI has done to a lot of people.
Yeah.
So in the coming years, the use will be a lot more obvious to the casual observer.
Correct. Got it. So, you said that AI in a way has the potential to transform business processes and, the way in which we do things. So, in what way do you see it affecting the CFO functions?
From a CFO's point of view, what you're trying to do is you want to be more efficient, get cost efficient, because as a CFO, your main goal is to find a way to optimize the business, ultimately, from a financial point of view. And one of the biggest pet peeves that I had when I become a CFO initially is that there's a lot of people that I need to have in my team to do a lot of mundane tasks, tedious work, but not something that I should be hiring people for. If I have the right tool and the right AI, I can have AI do most of those tasks. And then I don't have to have as many people in my team, but I just have a few experienced and specialized team that I can use to just check and make sure that everything is okay. And if there are errors thrown up by the AI, they can fix it very quickly. So what that does for me as a CFO is that it will reduce my cost, my overhead cost. It would improve my accuracy because human beings, we would make more errors than AI would. Of course, when you talk to people, they wouldn't think ordinarily, people don't trust machines, as it were. However, from my experience, I know that AI can analyze things a lot more accurately and a lot more faster than people can. It's just that if you have the experienced hands, they can do like a second check on it to make sure that what's coming out of the AI is good and accurate, then you'll be good. So as a CFO, what AI can do for me is it can do a lot of the processes that's been done by human right now. And that way it reduces my overhead, my cost, and everything else that I need to do. So that's where I'm looking at AI. And it also, in addition to that, also help me predict better. We do a lot of forecasting. We do a lot of projections. We do projection for the year. We do projections for the next 3 years. We do 10-year projections. When AI actually is integrated into this projection and analysis, they can use a lot more bigger data to analyze and form a view as to what the trend would look like, given the different variables.
Yeah, that's really insightful. So, we talked about the trends and the mundane tasks that are manual today. So, would you share some examples and use cases where AI can add, significant value, especially in the CFO functions?
So I'll give you an example. Currently, we have accounts payable accountants. We have accounts receivable accountants. We have a paymaster that checks and processes the payment. All those kind of tasks can be done by AI. AI can match the different documents and figure out, okay, the invoice matches the PO matches the delivery order, and everything works. And it can just say, this is fine, let's process the payments. We have GL accountants. Their job is to pull down information and enter it into a general ledger. That's something that can be done by machine. I tell people, when people say, I'm going to school to study accountancy, me personally, I don't believe you should be studying accounting. I think you should be studying something more than accounting, because ultimately, I see accounting as a function of accounting becoming more done by machines, AI, as opposed to a human being. What you need to understand is, yes, you need to understand in the accounting principles, how it works, because you need to still be able to set up the AI to be able to do all these things. However, the actual job of just being an accountant that's entering something to a ledger will go away, ultimately. In our current use case, we are using AI to do predictive pricing for freight rates. So we're analyzing all the data that we've collected over the last 5 years that the company has been in existence, and using it to predict the rate that should be for different routes based on different goods being carried, different time of the year, because seasonality is involved, difficulty of the route. All that is inputted into a predictive model and used to predict freight rates. And it's actually very close to reality. So now what we're doing is trying to use that predictive model to drive the rate in the market.
That's really amazing. So, have you had a chance to speak with your peer groups or, other CFOs at any point about the willingness and their willingness to adopt AI solutions?
Yes, incidentally, I was at a conference of CFOs last year in November, and we actually had a session around AI. And the question went out that, would you adopt AI in your current operations? And most people said yes. And some people are even already using AI. Some of the companies there already have subscription to OpenAI for the entire team. And what they said is that, yes, we'll use AI. We think AI is important and it could be useful in our operations. However, we'll still have concerns about things around AI. And, I think some of these concerns came from Hollywood. When you think about it, most of the AI movies always end up with AI trying to take over the world. And that has subconsciously programmed a lot of people to not trust AI and trust machines. So that's what I think. But the general consensus was that people are interested. People think you'll be uh, getting more integrated into their operations going forward. And people are looking at ways where they can integrate AI into their current operations.
Got it. Got it. And based on your conversation with your peer group, what are the challenges that you foresee in the adoption of AI, especially in finance and accounting?
Two main challenges was raised at that forum. One was data accuracy, because whatever you put into a machine is what comes out. And you need to be able to check and make sure that what's coming out is accurate. Because as a finance professional, accuracy is key. The second thing that came up as a potential issue was security. Because you put your company information into, if you would, a black box. And the question is, who else has access to that black box? Where does the information about your company go to? Is the AI keeping those information as its memory in order to use for others to predict or do analysis for others? Excuse me. So that's essentially a fear of some of the CFOs saying, how secure is this AI if I put my data into it? Where would I find my data 2 days later, 5 years later? So those are the two main issues that were raised.
Understood. So let's actually, dig a little deeper into security. So, what kind of security concerns exist in the CFO's mind for adopting any AI-based solutions?
So the main security concerns that a CFO would have is, like I was alluding to earlier, is my data safe? Because the financial data of a company is proprietary, and they wouldn't want that data to go out to their competitors, because sometimes you want to prevent what you report on your annual financials. It's different from your overall raw financial data, because your financials, accounting is based on some rules, and what you report is based on their rules, and it's backward looking. But the data that you provide into an AI, for example, could be predictive analysis. It's forward looking. It could help your competitors, like in our case, generate freight rates in a predictive model. So we don't want all those things to go out, because those are proprietary information that's important for your own business. So what we're trying to do is to make sure that whatever AI is being adopted is something that we know is secured. And also, from the accuracy point of view, you want to check and try out an AI tool to see how accurate you can predict or analyze what you want it to analyze. So you do a test on real data. You use real, for example, if I'm doing AI for AP, for example, I'll use real data, my POs, my invoices and everything, put it in there and see what comes out of it. And you have different invoices, different templates. You have some are handwritten, some are not handwritten. All those things you have to test and make sure that the AI can actually do it accurately. Because if not, then you can't rely on it, and you might as well continue using your individual accountants that you're using before.
That's quite reasonable. So, do you see some sort of resolution to the security concern? And if so, are there any examples you can share?
So from a security point of view, what you want to do is, sometimes you don't want to be in a cloud environment, but rather in a closed environment when you're using AI. So it's inside your intranet as opposed to be internet. So you know that at least whatever is going on is within the walls, so to speak, of my company. So I don't have data breaches on that. You could also look at an AI provider's certification, because you have different institutions that provide certification on security, on data security, on how well this particular AI protects the data of clients. So you could look at a certification. You could also look at historically, how has this performed? Has there been any stories of leakages or issues around this particular AI? And what is the AI doing? How sensitive is the information that the AI is using? And how relevant would it be if it were to leak out of it? So those are the things that you have to look at. And also from an accuracy point of view, you have to try it out. You have to try it out over varying type of data, and you have to try it out over a period of time. So in my prior life, I was a Six Sigma black belt, process optimization consultant. And we call something, when you're trying to measure something, you need to first check your gauge. We call it gauge R&R. Gauge R&R means the gauge repeatability and reproducibility. That means if you tested the same thing over and over again, it gives you the same results. And if you were testing different things across the board over again, it gives you the same result. So you testing the same thing, it gives you exactly the same result. It doesn't change. That means your gauge is accurate. So that's the kind of thing that you want to do for an AI that's using as a tool to predict something. You need to test it. You need to make sure that it has repeatability and reproducibility. That means data that comes out of it is something that you can rely on and you can present to your board, to your shareholders, to your potential investors, to your lenders, which are important, because if you give them bad data or bad information, that could impact your business.
That's some really great advice. So, we were talking about certifications. So, do you think that SOC 2 or GDPR or maybe ISO certifications of companies and their AI solutions would be able to address some of these security concerns?
Definitely. Definitely. I believe those certification is what gives comfort. That's what we look for. Because at the end of the day, you can't check everything and check all the different areas where there might be a potential security issue. But these institutions that do the certification, that's what they do. That's their bread and butter. They know the different areas they need to check, and they put the company through rigors of testing to make sure that before they give them the certification. So once a company or a tool is certified, that gives comfort to the users to say, okay, at least a third party has tested this and it has passed.
Got it. Okay. And, in order for the CFOs to be doubly sure about the security of AI solutions that they're exploring, are there any proof points that they should look into apart from these certifications?
So some of the things that I would look for as a CFO is that I would need to understand how the access control works. Because another thing is that I need to make sure that I can control who has access to the information that's inside this tool that I'm using. So how is the data stored? What's the access control options that I have? Where is the data stored? Because also, if the data is stored somewhere that has a security risk, then it's as good as being the whole thing has a security issue. So how are the tools classified and the data options that I have to be able to utilize this tool? And what are the classification tools that I have in order to even, because if you don't classify it properly, then you can't get the access rights properly. So, and then the information required that I need to review around the security standards and practices of this particular tool. What have they done in-house to be able to actually tell me that this is secured? And that's the different controls that I would look for in a tool to be comfortable to using their tool.
Got it. So apart from security, we also spoke about accuracy as another concern. So can you elaborate on how does, accuracy affect the process being automated?
So the accuracy of the output of an AI is very important because the information generated is relied upon, like I said earlier, by a lot of people. It's used for strategic and financial decisions. The information can be relied upon for payments. So let's assume I'm doing accounts payable. If I process it and it's wrong and I make the wrong payments to vendors, that could impact me financially. And it could also be used to do presentations. So we have KPIs, we have reports that you generate monthly to your shareholders, to your board. You have reports to the lenders, you have reports to investors. And if they are not accurate, you lose the confidence of those people, and then it becomes an issue for you. So they're giving them most AI tools are like black boxes. It will give the CFO comfort to know that whatever is coming out of this black box is accurate. Incidentally, I know what goes into a black box from my prior life. I used to work at a company that designs black boxes. So black boxes are called black boxes, but at the end of the day, somebody put it together. And that's where the AI developer comes into play. If you get comfortable with the AI developer and you know you have a sense of what goes into it, then it's not a black box anymore. It's something that you can rely on. So for somebody like me that's done data science, I can at least understand partially what's gone into the black box, so-called AI black box, and know that it's something that I can rely on and it's good analysis.
Completely agree. So, what relationship, Ayo, do you see in productivity, ROI, and accuracy?
So productivity drives ROI. So if I'm productive, that means I'm more efficient and I generate a better return on my investments. That's on one side. Gains in productivity from an AI can be quickly eroded if the output is not accurate, because you're saving on cost, but you're paying too much to your vendors. You're saving on cost, but it's taking you lost the confidence of your investors, so you can't even get additional funding that you need to grow your business. So that's why even though you're using AI, like I said earlier, I will still have some senior finance professional accountants to just check and make sure that things are going right. Because even if the AI was accurate before, something could have gone wrong in the code, and the code could have been corrupted. So you have to always periodically check and make sure that what's coming out of the AI is accurate. Because otherwise, when you don't have the right productivity, then your ROI is gone. And accuracy drives that productivity and in turn drives the ROI.
True, true. So, what are the different methods or due diligence that a CFO should adopt in order to address these accuracy concerns?
Trials. So a CFO has to try the tool, or the CFO team has to try the tool for a while. And it's not just trial for like 30 days. 30 days, you may not see all the different variations of data that will come or that the tool will be used for. So you need an environment that's more like a sandbox environment where you can try it out, so you can test it and see if it's accurate. You don't use it as like a production model, but it's more a trial model. You sit there, you run your real data through it, see how accurate the information are coming out. People are doing it by hand as well to check and to make sure that you can compare the gauge R&R that I was talking about. So you gauge what the AI is doing versus what human beings can do. And then you keep checking that. And once you get to a point where you're comfortable, then you can adopt it, and you can even make the case for it internally for the adoption. Because it's one thing for you to see a tool that you want to use. It's another thing to convince your board to be able to utilize this kind of tool, especially when it's an invasive tool like AI that can actually get into the weeds of your data and process things that everybody rely on.
Yeah, interesting. So, what time and effort do you think a finance team should invest in order to, assess the efficacy of some of the methods that you just suggested?
The time it takes to evaluate a tool varies, depending on the nature and the complexity of your business. Now, if you have more streamlined business where everything is homogeneous, then it's easier to test and you can get to a conclusion very quickly. If you, however, have a type of business like ours, where we have varying, in our business, we have what we call waybills. That's the equivalent of a purchase order. Waybills that are handwritten, maybe carbon copy, of the handwritten documents that you're trying to match to maybe the invoice may actually be typed and generated from a computer, but the way bill is handwritten. And then the delivery order is probably handwritten as well, because goods are being received at the warehouse. So how do you check? And it's from different customers. Different customers have different designs. So it might take a while before you can test the tool around the variations that you have, various variations that you have in order to get comfortable. So some companies, you could take a month and they'll be good because they're homogeneous, like I said. And some companies, it may take 6 months. It may even take a year, up to a year for some. But it's always good for an AI developer to give time for the clients to get acclimated to it. And the longer they use it, the more sticky it becomes. And the more difficult it is for them to actually not be able to use it anymore. So if you give time, then maybe people get used to it and then they'll have to adopt it. But the time varies. A month, 6 months, a year, you never know. It depends.
Got it. Mhm. So, Ayo, now that you've suggested security and accuracy and the associated integrations, how do you see the space of AI in finance-led automation evolving over the next couple of years?
So I believe that the evolution of AI in finance over the next couple of years will be exponential. I know a lot of developers of tools for finance professionals, and some finance professionals are already incorporating bits and pieces of this into their day-to-day operations. There are also dedicated companies that are just looking to develop AI tools for specific tedious tasks, like I was mentioning earlier on, that accountants do, and repetitive tasks that we do. I'm excited to see how AI shape the future of finance, and I am looking forward to seeing how the adoption goes. As for me, we're ready to adopt it. We're a tech company, so we like those kind of things, AI, predictive modeling, and using tech to solve real issues in the sector. Like we're in the logistics business, which is traditionally non-tech. But what we're trying to do is to introduce technology to solve the issues of road logistics. The shipping and air logistics, they've been more, tech is used more in those. But on road logistics, trucks just going up and down the road, it still lives in the past. And we're trying to bring them to the 21st century. So I think AI will shape the future of finance generally. It will shape the future of accounting, because a lot of these mundane tasks can be essentially, AI can take over and do it for us. And then optimization comes out of that, productivity improves, our ROI improves, accuracy improves, and everybody's happy.
Yeah, we are on the same page about that. So, I greatly appreciate your participation in this discussion today. And, it was truly enlightening to converse with you about the AI roadmap in finance, along with, the potential hurdles, the solutions, as well as the advantages that the fellow CFOs can harness. So thank you so much for your time again.
You're very welcome. And I enjoy talking about AI. And I keep looking at ways that we can incorporate into our business. Thank you so much.